Alright, I want to update you on Viper Crude today. We had a trade in both NinjaTrader and TradeStation. I have a slightly different code in NinjaTrader because I'm still trying to work out the differences in the coding. And the trade in NinjaTrader was significantly greater. And I want to show you the results for this. You can take a look. You can click on the Show Data Box feature, and this will show you the price data. Whenever you click on a price, as you scroll along here, you can see the prices change. When you want to see what the trade was, you click on the blue arrow for entry, and you see we were long at 111.075. Go over here, we exited at 112.75. So significantly better trade than in TradeStation. I want to show you the overall performance summary for this. Strategy performance, Viper Crude, historical. Still trying to work out the differences between the NinjaTrader programming and the TradeStation programming. So, but you know, it is a strategy. The current NinjaTrader strategy is a strategy that's done very well as of late. As of November 2010, pretty good results. So here's the recent results. It's gone up about $4,000 to it's about $10,000 in the last 5 months on this strategy. So trying to get the best of both worlds. I have a trick I want to show you here in TradeStation too, as well. So on the exit strategy. So let me flip over to TradeStation and show you the trade in trades. Here is the trade in TradeStation. We got in at 112.55 and we exited at 112.75. Gave a lot back, got in a little bit late. So that is a strategy. I want to show you a trick, an easy language trick, because lately if you felt like it's given a lot back, I want to show you one thing you can test and do on your own. I'm not changing the portfolios to this yet, but I want to show you an easy language strategy. So this is a freebie, and I want to pull the easy language editor up. Alright, I went to File, New, and created a new strategy. I'm going to call this Exit, and it's going to be dollar trail PT. And so what that's going to be, it's going to be a strategy that once it has hit a certain profit target, we are going to exit it. So you can take all this code out, delete that, and then I've already copied the code and I'm pasting it. And so what you want to do is you want to pause the video if you want to do this, and you want to create the strategy exit dollar trail PT or whatever you want to call it. I like to use exit because it's just an exit strategy, and you can insert this into any trading system that you have. It's just an exit, and if max position profit of 0 is greater than 350, then set dollar trailing 200. And so once we hit $350 of profit, it's going to kick in a really tight trailing stop loss. If you're in a market environment, you see a spike up and then it give back, spike up and then it give back. Like we've been in lately, you can potentially use this exit. You want to verify it by clicking that, and then you go to your strategy and you insert that. Insert strategy, and you come down to exit dollar trail PT, and you can turn it. Let's turn it off first. I want to show you the difference. I've gone back 2 years. Gone back 2 years on this. I'm going to show you the results for 2 years. $29 average profit per trade after slippage and commission. We've got $25 slippage and commission in here, and you've got 189%, 44.27, 83.85 total profit. And when you watch these, when you update this, I've already tested it. This number goes down by $1, but this number goes up to about 300%. So, format, strategies. I also want to look at the equity curve real quick. See, we've had some recent gains. We had a good strategy, went through a drawdown, and now we've had some positive climb in the equity curve. But I want to show you the difference between using this exit approach, since it feels very stubborn the way the market has acted, as far as it'll run up and then say no, we come back down on our profits. So want to lock in profits a little better. This is a way you can do it. Alright, pause the video. So resuming the recording, you can see a much greater positive equity in recent months and overall when you have that exit strategy. Also, when you look at this, 28.33, about $1 lower. The drawdown goes from about 4,400, I think, to 26.50. so you get a return much higher, 304. Net profit's about the same. And so you get a slightly better strategy the last 2 years. We have the benefit of hindsight when we are developing this. It could change. You know, this market could get really hot and start running. But that is one way you can use easy language. That's an easy language trick. That's something you can test, and I just wanted to share that with you today. And let me know if you have any questions on that. Alright, I wanted to show you a video also of New York Scalper. This is the basic strategy of New York Scalper. It takes all trades every day that the signal entries for, and at the bottom you have a DLL, and it sends the equity curve information. The white line is the closed equity, and the yellow line is the open equity. So you can see run-ups and drawdowns throughout the equity curve. But this information is passed along to a second window where it looks at the daily profit each day. And if the original version of New York Scalper lost $100 or more, then the money management version will begin to trade. And it'll take the same signals, but it'll only take signals on days after there's a loss. And the point of this is the cyclical winners and losers. The average profit per trade is the key on this. You look at the performance summary for this without slippage and commission, without back testing so that the limit orders are filled. You get 1652, and you know, pretty good equity curve, really nice equity curve. But this isn't realistic for trading because you're going to get lots of slippage and commission. You might get $25 slippage and commission per trade. If you cancel your limits and you replace them at the market, you're going to get $12.50 slippage there. You're going to get it on the exit, but not every trade is a limit order. You have some stop orders, you have some market orders, and then you have commission as well. So it might be break even or less than break even once you consider all the trades. But when you look at the money management version, we do a little better. This is a progress in work. I'm going to flip to another workspace. It takes this data to the money management window, and we take a look here at today's trade. There was no trades today because yesterday was not a loser. It was a loser, but it wasn't a loser of $100 or more. Let's look at the performance summary again. Periodical returns. We had, the last time this traded was on the money management version traded was on the 19th because it had a $100 loser on the 19th. It also then traded on the 11th because the 8th was a $306 loser. And so it doesn't trade as much. It only waits till the $100 losing days, and then it trades the following day. So if you wait for a loss on this, you have 371.50 on 8 trades. That is about over $40 a trade. Then you have $61 on 7 trades. After it's only $10 a trade. So after slippage and commission, you're gonna lose on that. And then on the 20th, you have 373 on 7 trades. And so flip it over. We pass this information along to this other workspace. It has the same strategy in it, but it only trades after. Let's go back to the 20th, and there are the trades, as you can see. On the 20th, it's 37.50. Once again, let's see. Let's change the settings on this because I've got this set up to backtest to fill entire order when trade price exceeds limit. So the results are going to be different. If we change it, before we change it, let's go take a look at the equity curve. This is all limit orders. This is requiring all limit orders to trade through the price. So in real-time trading, some of the limit orders that don't trade through the price will get filled, and if those limit orders get filled and they don't trade through the price, that means there was no adverse price action against that limit order, so that trade went in your direction. So you would have some additional winners that don't show up here, if that makes sense. If it doesn't make sense, let me know. Email me, call me. But this is we're getting $6, so we're barely beating it. You've got the annual periodical returns. These are the results. This is requiring the limit orders to be filled. It's a little different if we do not require the limit orders to be filled. So we're going to go in here, format strategies, properties for all, back testing. We're going to not require the limit orders to be filled, and we'll take a look at the results. All right, here's the equity curve without requiring limit orders to be filled. Here is the, you get $25 average profit per trade the last couple of years. You get all these trades that take place. So some of these, I'm going to have to go back and check these because some of these prices did trade through the limit order, and they did not fill. They were only showing the a couple of trades over here. So I'm going to double check on this. But this is the current version of this and the way this works. But you've got $4,200 and 123 trades. That's over $35 a trade on average, which is enough to make a little bit of a profit on a scalping strategy and make money on days that your other systems might lose. And so it's potentially good to add into a portfolio of systems that are trend following, because even if it's slightly break even or a little bit better than break even, if it makes money on days your other systems lose money that are trend following, you can even out your equity curve. Even break-even strategies, even a break-even strategy can even out your equity curve if it's significantly different, if it works significantly different than your current strategy. So I wanted to show you that. I also want to show you Cobra 4. Here's Cobra 4 E-mini Russell. Let's look at the report on that. Great trade today. This is a strategy that I recommend could be traded with the low frequency portfolio. As an additional counter trend strategy, since Cobra 5B was not trading that much. These are the results on the year with slippage and commission. Let's look at them on the month. This month we've had a down month so far. Last 2 months we did good. February, March we did good. November, December, and then we had a losing month in January, a losing month in March so far. But today was a good month. Before today, we had $655 profit today. That's after we take out $25 slippage and commission, so that would be $680, and then we take out 25 since this only ticks in $10 increments, and so you wonder why there's 5-point increments. Is because we take out $25 round turn slippage and commission, and we get in a limit order on this as well. Let's look at the monthlies again. So we would have been down almost about $1,500 on the month after today's trade. We're only down $860, so made a little bit of a comeback. Here's the equity curve, positioned nicely to maybe make another run up. Kind of cyclical the way this is working. So not saying it's going to run up. It could come down here, but it's just had that cyclical equity curve. So I wanted to show you this as well, and that is the video update for today. Let me know if you have any questions.